Hey, Steve here, and in this video I want to talk about how to set up your goals for trading, and this will be a couple of part series in this section. But a few aspects we're going to talk about in this video: where are you trading, how much you're starting with, what are your goals, are they specific, are they realistic, are they long-term, short-term, and what type of trader are you going to be, along with a couple of other things as well. So let's get to it. First, where do you plan on trading? Is it binary options? Is it spread trading? Is it a stockbroker? Is it forex broker? Futures? Which is it? And you need to have, if you have multiple accounts, that's fine, but you need to have separate goals for every place you trade. So don't mix and match. Don't have the same goal in your forex account as it is in your binary options account, and so forth. Have a specific goal in your forex account, have a specific goal in your binary options account, and so forth. I have different goals in my retirement account than I have with my kids trading account. I have different goals in a forex account than I may in a binary options account. So I know where know where you're trading, and if it's more than one place, lay out the goals for each location and where the money is. And then how much do you plan on trading on each of these accounts? Of course, that's a no-brainer, right? Well, you need to determine your amount in your account, as it'll help determine whether your goal is realistic, and we'll get into that later. Also, how much pain you can handle. For some people, $10,000 is no big deal. If they lose it, they lose it. For some people, $500 is a lot of pain, and they don't want to deal with that. So it depends on how much pain you can handle as well. And my other suggestion is never to store money in your account. So if you're storing money is dangerous in any account, no matter what type of brokerage you're having, whether it's a stock trading account or forex or whatever. There are companies that do go down from time to time, and getting your money out of them is a pain in the butt if they do have fraud in the company or whatever the case is. But it also protects you from trading emotionally and when you're not mentally right, or you're on a big losing streak and so forth. And you can blow through your account quite quickly if you're storing money in the account. And you're like, well, okay, I was wrong there, but I'm going to double up here because I have my money stored in my account. So it's very dangerous to do that. So don't store money in your account if at all possible. I'd rather have, say, half of my money in my account with the broker and store the other half in my bank account. That way, if I do blow through the money, I still have an opportunity down the road to trade. I won't be completely out of the market. And adding money is pretty quick nowadays, from a few minutes to a couple of days max. And even if you're a very conservative trader, I'd still not store money in any broker. You can still trade your account like it has the full amount in your brokerage, but you don't have to trade. You don't have to store the money in there. So, for example, if you want a specific money management, say you only want to risk, 5% per trade on a particular trade, and you're starting with $1,000, so you're trading $50 per trade. There's no reason to have $1,000 in your account. You could easily have $500 in your account. It would more than cover your trading activity, and you can still act like you have $1,000 account. So you still have the other $500 in your bank account. You can act like you're trading $1,000 account without it actually being in there. So that's the way I would trade it, and just don't store money in your account. Okay, so what are your goals? This is going to be different for everyone, but only you can figure out what is best for you. And you need to ask yourself, once you have that goal in mind and on paper, is this a short-term goal or a long-term goal? And by short-term, I mean, is this something that can be accomplished in under a year, realistically? So not, hey, I have $500 and I'm going to turn it into $1,000,000, and that's a short-term goal. Something that's semi-realistic. Now we're going to talk about in our example something that is very aggressive, and the percentages are very big. So this isn't retirement money type of investing that we'll be talking about in the Trading with Goals section in the examples that I give you. Obviously, there are some aspects of that you can use even in your retirement account, but you need to have some short-term, long-term goals, but determine whether this is something that is able to accomplish in a year. Like for me, buying my first computer, as I mentioned in an earlier video, was my first trading goal, and that happened in 3 or 5 months, something like that. Maybe you want a boat or a car, vacation, TV, raise money for charity, whatever the thing is. Is it a short-term or a long-term goal? And how much is that? How much money is that goal going to cost? So, if in other words, it's a particular product, um, like let's say the goal is to buy a used boat, and I want it by July 1st, and today is January 1st. I know I have 6 months in order to complete that goal. So my goal is got a 6 months window, and let's say I priced out some used boats, and the boat is $4,000, and I'm starting with $1,000 in my brokerage account. So now I know how much time that I'm allowing myself for this goal, which is 6 months. I know how much money that it's going to cost to get to that goal, to get to my boat, which is $4,000, and I know how much money I'm willing to invest, and that's $1,000. So I have those three numbers, and once I have that, now I can determine what type of trader that I'm going to be. And the money management really flows out of this. So if you're really interested in money management, this is the type of thing where money management flows really easily. But that's why I talk about having the goal set in mind first ahead of time. Because if you have that, everything kind of really flows out of that. So this will determine, the type of trader will determine how quickly that I may reach that goal, and how much risk that I want to give for that particular trading goal. So let's dive into some examples here. So I'm going to give you a few examples. Of course, you could trade a lot of different ways. These are only 3 examples. I'm sure there's 50 or 100 or 200 different ways to get to that particular goal. But I'll show you just a few different ways. In all these examples, I'm using a $50 contract size. So like if you're trading at Nadex or IG Index, if you buy something for $50, if it expires in the money, it's $100. If it expires out of the money, it's $0. And none of these examples include taxes or commissions, etc. But we're going to dive into 3 examples, and like I said, there's many more, and you can tweak these however you want. But they're just to kind of give you an idea of how a person would go about doing this. He has $1,000. He wants to get to $4,000, and he wants to do it in 6 months. So that's going to be the example for all of them. So they're all the same, but they're trading differently, just depending on their personality type and what they feel comfortable with. So let's dive in. This guy really wants the boat fast, and his goal is the boat, and he says, okay, I'm willing to risk the whole $1,000. If I lose it, I lose it, and I'll buy a boat. I'll try again next year. I'll invest $1,000 next year and try the same thing. But he's super aggressive. So he buys 20 contracts at $50, which means his full $1,000 is invested. If he wins that trade, so the thing goes up or down like you predicted, he's going to have $2,000 in his account. So he doubled his money. If he does that one more time, if he doubles his money one more time, so he'd buy 40 contracts times 50, which would be $2,000 outlay. If he wins that trade, he has his $4,000 and he has his boat. Simple as that. So he would need 2 trades to win in order to get his boat. So he has to be very confident in those 2 particular trades, but he has 6 months to do it. He doesn't need to look at the markets all day long. He just needs 2 really good setups over the course of 6 months. So in his particular case, maybe he has a system that hits randomly, and over the course of 6 months it may hit 3 or 4 times, say an S&P along for the ride trade system or FOMC type system, and he really digs down and and does the research on those particular systems, and he feels good about those two particular trades, but he's loading up, and he is spending all his time on the research aspect. Not any old trade will do. He doesn't want to be in and out of the market every day. He's looking for a quote-unquote lock type trade. That's what he needs in this case. He needs to hit them both, and of course he can vary this if he wanted to put stop loss in there, risking 50% of his account, so he would bail out if the trade went to $25 or something like that. So there's a lot of different aspects that he could add to his money management and so forth, but most of his time is going to be on the research side because his risk reward is so high, and he only needs 2 trades in a row to win, and he'll have his boat. So in his particular case, he is doing a ton of research and making sure that he is right on those 2 trades. So that's example number 1. Example 2 is a little less aggressive, but it's still aggressive. This guy does the math, and to get to his $4,000 with a starting balance of $1,000, he needs to make 27% return per month compounded. So after 1 month, his account would be $1,270. After month 2, it would be $1,612, etc. And then after month 6, he would be over the $4,000 number. He can trade a number of different ways. He could trade from just taking 1 trade per month, but looking for only a 27% return per trade. So instead of so he invests all his money. He does the same thing this first guy does, but instead of waiting until the market closes at $100 or a contract price of $100, he sells his position when the market gets up to $64. So when he's in profit, $14 per contract, he sells all his positions and he's out of the market. He could, of course, put a stop in place or whatever as well, but he's looking for a much smaller gain, but again, only 1 trade per month, so maybe 6 trades over the course of those 6 months. Or he could be trading less. Maybe he only wants to invest $500 instead of the $1,000, so he's trading maybe 1 time per week or something like that. So, but he's trading more, and he needs a certain win rate in order to get the goal. And we'll talk a little bit more about that in example 3. Example 3 is a conservative or moderate. It's probably a little more moderate, but he's very active. He wants to trade. In this example, he's trading 1 contract for every $1,000 in his account when he recalculates every month. So he's only trading 5% of his account. But in his case, he wants to trade 25 times a month. He wants some action, 1 or 2 trades a day, and he makes $50 profit per win. So he holds on to the end of the day or the end of the hour, however he's trading. And on losses, he loses $50. So he figures it out and says, okay, if I want to trade 25 times a month, that means 16 trades have to be wins. 9 trades are losses. That's 64% winners. And if I do that, I'll end up with $350 profit for the month. And you can see those figures there. So after month 1, $1,350 is in his account. After month 2, $1,700 is in an account. After month 3, there's $2,050 in his account. At which time, he would do 2 contracts because he's doing 1 contract for every $1,000 in his account. So after month 3, he recalculates, does 2 contracts. So month 4, he's going to make $700 instead of $350. So after month 4, he has $2,750 in his account. After month 5, he's got $3,400 in his account. He bumps it up to 3 contracts, and after month 6, he's at $4,500. He has his boat, and he is rocking and rolling. So obviously those are only 3 examples. There's many, many more examples, but you have to determine, once you have the goal set in mind, you have to determine how much you're investing, how much time you have to get there, and then determine what type of trader you want to be. And obviously you can mix and match on these, but you can easily figure that out based on the number of trades, how often you need to be right. So if this particular guy is only winning 60% of the time, he may have to trade more often in order to have a better profit and so forth. So we're going to take a look at more things here in the next video, so follow me over there.